How to invest your first $1,000, Beginner's Guide Rules. If you had $1,000 today, what would you actually do with it? For most people, this is where uncertainty begins. Some will spend it immediately, some will keep it in savings, and some will try to invest but end up making costly mistakes. Because the truth is, investing your first money feels simple until you actually try to do it. There's too much advice, too many options, too many opinions, and one wrong move can make you lose confidence before you even begin. But if you understand a few key principles, that first $1,000 can become the foundation of long-term wealth. Welcome to Silent Wealth Stories. This channel focuses on practical financial decisions that build real wealth over time. No hype, no shortcuts, no unnecessary complexity, just clear strategies that work. In this video, you'll learn exactly how to approach your first $1,000 as a beginner, from avoiding mistakes, choosing the right investments, to build a system that grows over time. Let's start with the most important rule. The first rule: don't rush. The biggest mistake beginners make is rushing to invest. You hear about a stock that is going up fast. You see people talking about quick profits. You feel like you're missing out, so you act quickly. But investing is not about reacting. It's about understanding. When you rush, you're not investing. You're guessing. And guessing with money is expensive. Smart investors take a different approach. They slow down. They ask questions. What exactly am I buying? How does it make money? Why does it have value? Because when you understand what you own, you are less likely to panic when prices change. And that is what keeps you in the game long enough to grow wealth. Rule 2. Build your financial base. Before you invest your first $1,000, you need a stable foundation. Think of investing like building a house. If the foundation is weak, everything built on it becomes unstable. So ask yourself, do you have any high-interest debt, credit cards, short-term loans? If yes, that should be your priority, because the interest on that debt is working against you every single day. Paying it off is often the best investment you can make. Next, do you have a small emergency fund? Even a basic safety net matters, because without it, any unexpected expense can force you to sell your investments early. And selling early is how many beginners lose money. A strong foundation protects your progress. Rule 3. Where should you invest? Now let's talk about your options. This is where many beginners get overwhelmed, so let's simplify it. Option 1. Index funds. These track the overall market. Instead of picking one company, you invest in many at once. This reduces risk and makes them ideal for beginners. Option 2. ETFs. Similar to index funds but traded like stocks. They offer flexibility and diversification. Option 3. Individual stocks. You invest in specific companies. This can be rewarding, but also risky if you don't understand the business. Option 4. Bonds. These are more stable but offer lower returns. They are useful for reducing overall risk. For your first $1,000, simplicity is your advantage. You don't need complexity to succeed. Rule 4. How to allocate your first $1,000. Now the question becomes, how should you divide your money? A simple beginner approach could look like this: 60% in index funds, 30% in ETFs, 10% in individual stocks. Why this works? Most of your money is in stable, diversified investments. A small portion allows you to learn by experimenting. This balance gives you both safety, learning experience. Because investing is not just about returns, it's also about building confidence. Rule 5. Risk control. Risk is always present, but the goal is not to avoid risk completely. It is to manage it. Here are simple rules. Avoid anything that promises quick returns. Avoid investing based on trends. Avoid putting all your money in one place. If something sounds too good to be true, it usually is. The market rewards patience, not excitement. Rule 6, the long-term mindset. This is where most people get it wrong. They expect fast results, but real investing is slow. Your first $1,000 will not make you rich overnight, but it will do something more important. It will start a process where your money begins to grow, your habits begin to improve, your confidence begins to build. Over time, those small beginnings compound, and compounding is powerful. Rule 7. Consistency is everything. Your first $1,000 is not the goal. It is the starting point. The real power comes from consistency. Imagine adding to your investments every month, even small amounts. Over time, the growth becomes noticeable, not because of one big decision, but because of many small ones. Consistency turns effort into results. Conclusion. Investing your first $1,000 is not about perfection. It's about direction. The direction you choose today will shape your financial future. Start simple. Stay consistent. Think long-term. Because wealth is not built in a moment. It is built over time, quietly and steadily. Subscribe to Silent Wealth Stories for more practical lessons on building real wealth. And remember, it's not about how much you start with, it's about what you do consistently.